Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update regarding the global markets. So after last week's sharp sell-off, major US indices rebounded strongly on Monday, driven by optimism that the Federal Reserve may lower interest rates later this month. Wall Street saw notable gains with Dow surging 1.2%, the Nasdaq climbed 1.3%, and the S&P 500 closing 1.16% higher. Going ahead for the S&P 500, the zone of 5,500, 5,530 will act as the immediate hurdle as the 20 and 13 day EMA is placed in that region. Any sustainable move above 5,530 will lead to a sharp upside rally up to the levels of 5,600 in the short term. On Monday, Brent oil has witnessed a minor pullback. However, the major trend remains bearish as it hovers at its 16-month low. A sustained move below $70 could open the door for further downside, with prices potentially falling to $67 in the short term. The US dollar index surged by 0.41% on Monday. Going ahead, the 20-day EMA zone, that is 102.80, will act as the immediate hurdle for the DXY. Now coming to the update regarding our markets. So Nifty, after sharp profit booking last week, the benchmark index opened with a downside gap on Monday. However, it found support closer towards the zone of 24,760, which coincides with the 38.2% Fibonacci retracement of its previous upward move and rebounded nearly 183 points from the day's low. It closed about 24,900 mark, posting a gain of 0.34% for the day. On the daily chart, it formed a bullish candle with the prominent lower shadow indicating buying interest at lower levels. Going ahead, the zone of 25,010, 25,040 will act as the immediate hurdle for the index. Any sustainable move above the levels of 25,040 will lead to a sharp upside rally up to the levels of 25,150 followed by 25,230 in the short term. While on the downside, the support has shifted higher in the level of 24,830 levels. On the derivative front, if we see, the September futures ended higher by 0.32% and the cumulative open interest of the current, next and far series has dipped by 3.62%, which indicates an overall short covering rally. Among the constituents of the Nifty index, 9 stocks have witnessed long build-up and 15 stocks have witnessed short covering rally, while 18 stocks witnessed short build-up and 8 stocks have witnessed long unwinding. Coming to the option chain data, 25,000 strike has significant call open interest followed by 25,100 strike, and on the put side, 24,900 has substantial open interest followed by 24,800 strike. For the weekly series, if you see, the PCR is at 0.67, while for the monthly series PCR is at 1.46. Coming to the update regarding Bank Nifty. So Bank Nifty has strongly outperformed the frontline indices on Monday. It has surged by over 1% and formed a piercing line like candlestick pattern on the daily scale, which is a bullish sign. Additionally, the index surged above both its 20-day and 50-day EMA, further reinforcing the bullish outlook. The rally was largely driven by ICICI Bank, heavyweight in the index, which gained more than 2% in trade yesterday. Going ahead, it is likely to continue its northward journey and test the levels of 51,450 followed by 51,900 in the short term. While on the downside, the support has shifted higher in the zone of 50,800 levels. Coming to the option chain data, 51,500 strike has significant call open interest followed by the 52,000 strike, and on the put side, 51,000 has substantial open interest followed by 50,500 strike. Now coming to the key market indicators. So in trade yesterday, the volatility index India VIX tumbled by 6.44% and ended below its short term and medium term averages. This signals a notable decrease in the overall market volatility compared to last week. If we see the advanced decline ratio, it leaned towards the declining counter, suggesting the rally was driven primarily by selective large cap counters in trade yesterday. Coming to the key sectors in focus, so Nifty FMCG has given a consolidation breakout on Monday. We believe it is likely to continue its upward journey and test the levels of 65,000 followed by 65,500 in the short term. Nifty Financial Services has taken support near the 20-day EMA level and witnessed a smart rebound. It is likely to outperform the frontline indices in the next couple of trading sessions. Coming to the FII DI data, both FIIs and DIs were net buyers to the tune of 1,176 and 1,757 crores respectively. That's a wrap of today's edition of the podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.